Welcome, folks. This is Euro USD. So we have this video is going to be about how to backtest and and the power of backtesting. So many of us don't know how to backtest, or they don't know. Maybe they think that using a market replay tool will be the only way they can backtest, but that's not the case. So today I'm going to teach you how to backtest the way I usually do it, based on the times that I frame my trades within. So I usually backtest within the silver bullet window of time, and also maybe sometimes in between the intraday price action. But mostly I capitalize on the silver bullets and the London Open and the New York Open killzone. Also, we have the PM session, whereby you could get something, maybe a retracement or a run on liquidity during the PM session. So all these that I'm talking about, I'm referring to into the New York local time. So you should always make sure that your trading view is toggled on to the New York local time. So you don't need a market replay tool or a replay bar chart for you to backtest on a certain strategy, whichever you're using. It doesn't mean that I'm trading the ICT strategy that you should be also backtesting using the ICT strategy. So the way you backtest is very simple. So let's say backtesting is basically looking at old data that price has left behind. So when you see that maybe price went to a certain level, then reversed, then you ask yourself, why did it reverse? Then you move to the left and see what was to the left that made price to reverse. And if you see that thing, then now you know, whenever you see that thing in future, then you know that it might reverse. You won't be sure, but it might reverse. So the only way you can learn this is by testing through this old data, looking at old price action, see how price reacted to certain levels, so that you can register that into your mind, so that when you see that live as price is playing out, it will always be easy for you to tell what price will do next. So after you've backtested your strategy, then you come, maybe you forward test whatever you've backtested, and then you can read the tape without doing anything, no placing any trades, literally doing nothing. So but this is going to be about backtesting. So for example, this is today's price action. Price has already printed the charts, so that is what you're going to use to backtest. So let's say, for example, we are looking at the London Open killzone, which is in between 2 to 3, or maybe you can extend it from 2 to 5 in the morning. So, and I'll keep on repeating, this is will always be on the New York local time. So you make sure you set your trading view to New York local time. So we had this run to the downside. We had these sell side residing below that. It was taken right there. We had these lows right there. So let me delete this one first. So as you can see, let me even delete this one and delete this one, so that you can see price using clean price action. So if you'd like to maybe get this indicator, you just go to the indicators tab right there. So let me show you the so it's called market session indicator. Just let me go into because it helps a lot when it comes to so you have to search here for these FX market sessions by this company, and then you activate it, and then you'll have this. Then you can always change your settings. So me, I removed Asian range, Asian, and also Tokyo, and what else do we have? Tokyo, and I don't remember the other one. So you have that. So this one helps me in terms of looking where the silver bullet happened prior to maybe a session open or a session close. So that's what it is for. It just helps me in regards to seeing fast without looking at the time down here, so that you can always know when price will do a certain thing, because it will be just about maybe London Open time. So as you can see, when price came down here, it reversed, yes. But why did it reverse? Then you look to the left. What do you see to the left? We have an inefficiency right there. So that alone might make this price to reverse. So whenever you're backtesting, now you go take whatever you use to mark your gaps, anchor it to the gap, the low to the high, and then maybe we'll go into the maybe 1 minute chart for you to see if there was a market structure shift or any other entry model that you could have used. So we had that run into the inefficiency, and then we reversed, taking out these highs right there. So that is basically how you backtest, so that whenever you see price doing a certain thing within maybe the silver bullet or the macro window of time, then now you could anticipate maybe for a run higher or a run lower based on what price has already done. So you don't act if you're not sure of what price has done prior to the maybe to a move higher or a move down. So when you see this, when you backtest on this, then you go into a 1 minute chart, see whether you could have framed any entries based on maybe the 2022 mentorship a way of entering into a trade. So if you see that, maybe next time when you see that on a 15-minute chart, you will go into the 1 minute chart, frame some entries, and place that trade, because now it has already registered into your mind how you saw that happen. Even if you didn't see that happen, the mind knows that it should happen the way it should, so that you don't have to fight over that inside your mind. So backtesting is really powerful, and you don't need a market replay tool for you to know when to buy and when to sell, and when maybe not to do anything. So as you can see, that was quite simple of how you backtest. So here you have another example. Even if, let's say, you wanted to know why did it reverse when it reached this point, maybe you see there was no inefficiency. Maybe there was an old fair value gap like this. You extend it through. Did it respect that? Yes, it did. If it did, then you know that a fair value gap is not a one-time use and then you throw it away. It might be traded into several times. So you backtest that. If you journal that, because for you not to forget. So as you can see, price took out these highs, traded inside these inefficiency. It was an old inefficiency, as you can see. It seems it's so small. As you can see, we had these from these candles low to these candles high. We had that gap. Let me mark that. So we had that high to that low, and then you extend it forward right there. As you can see, price traded into the midpoint of that and offering. We had this order block right there. So it went, as you can see, that candle's high. Maybe you read here. We had 715, and this candle's low was at 717. Now you can see that there was this candle's high touched this candle's low. So that is to offer smart money entries and a handshake for them to go short and eventually taking out this low, aiming for this inefficiency. So that is one of how you could you want to know why price. The reason is knowing why did the price react to that level. So if you know that, the next time you see that, it will be so easy for you to know that price is going to react based on that level, maybe on that logic. So also here we had this gap. So only here we only backtesting based on the ICT kill zones. So here we had this was at around 7. So we have 7 to 10 AM, which is the AM session silver bullet. So we had price moving from a premium to a discount, and then trading into a discount, and then reversing, taking out these highs. And then as you can see right now, price is reacting off of these levels. Why? Because it has taken out the buy side, and we have also these inefficiency where price has already traded into. So you have these. So all these, whenever you mark these, this is your way to backtest, and you journal them. Maybe you screenshot that, you journal that for you not to forget. So we had this run down into an inefficiency right here. So we had that, and then a reverse. So whenever you go to a lower time frame, maybe like a 1 minute chart or even less, and you see a market structure shift, you see a breaker, you see anything that is salient to your entries, and you can take that as an entry, then you go long on that because it has already showed you the willingness, wanting to go to the upside or to the downside, depending on what you are looking for. But here we had that, and here we had that. So that's basically how to backtest. So before we go into the 1 minute chart, as you can see, these are 1 day, and then here we have another day. So you can always, this indicator will help you always make your backtesting so simple. So you know this is Tuesday. If you go here, this is Monday. If you go to the right, to the left again, this is Friday. So you can always move to the left until this indicator is no longer offering you this data for you to backtest on. But always, if you exhaust, maybe this is Euro USD, go to gold, go to pound, go to Aussie dollar, go to any pair. Any pair will work, especially the pairs that have USD as their base, or maybe as a pair, if I may say so. But always make sure that at least you have USD being one of the the currencies. So you have Euro USD, you can have USD JPY, anything that has USD will be very good for you to backtest based on the ICT kill zones, because they only act on the New York local time. So it's that simple. So if you go to 1 minute chart, and we have this, we have that. So this is the 2 a.m. candle that went down, checking out these sell side, and then we had these let me delete this first. Then we had this swing high right there. So we had that, and then we had an inefficiency. So this is the 2022 mentorship way of entry. So we had an inefficiency, and also we had these volume imbalance, both of them being inefficiencies. So we had that, and then we had this high. So when this high swing high got taken out, and then it left some gap, so that would act as your entry, maybe to support price for it not to go to the downside. So you place your long position maybe inside the volume imbalance, and your stop, you can place your stop right below the midpoint of the gap, or just below this low. Price might trade into the midpoint of this in a week, because we treat weeks as gaps. So you can always anticipate and expect that to happen for it to trade into the midpoint of a week. So but here we had that, and also this will be a good this from low high, lower low. This is a breaker, extend it through. Whenever price goes and comes back into that, you anticipate for longs. As you can see, we reacted off of that key area right there. So that's a breaker. But here we had that. What could you be aiming for? The highs. You can say you could be aiming for those highs, or maybe eventually aiming for these highs and this inefficiency. So none of that is wrong. So maybe you could be aiming for the lower end of the inefficiency, and that will always be traded into, because we have buy side residing above these highs. So we had that, or maybe even the midpoint of such a week. If you ever see a week, midpoint could be a good target for you. So we had that. It was quite a good trade. As you can see, we had a 8-hour trade. So we had that, and notice that we only do this in between the ICT silver bullet window of time. So we had that, and also we had this. So from 7 right there, 7 a.m. to 10, you look for your setups to form in between that. But based on a higher time frame perspective, so you should not always be in a 1 minute chart, and if you see a market structure shift, you anticipate maybe for long positions. You should have narrative of where price is likely to go, and then where are you at that time. So at this moment, we had this price action here. Price came down, took out the sell side right there. We had an inefficiency right here. So we had that as your entry. As you can see, price traded inside the inefficiency. Nothing was wrong with that, but price reversed and then came. If your stop would have been below maybe this low, or below the midpoint of the gap, you could have been taken out. But here we had another trade. Maybe if it could have been taken out, there will be losses. You're never sure about whatever you're trading, but at least have narrative. About 90% that will always happen. So we had this, and this only happened because we were too close to New York Open, so price would likely take sell side before moving to the upside. So we had this run down, taking out the sell side, and then shifting higher. So we had a market structure shift. We had this high being taken out right there, and then we had this inefficiency. So price traded inside that, and that would have been your entry right there. And then your stop should be placed, you can place your stop below that low, no problem, or below the inefficiency, or maybe the midpoint of the inefficiency. So we had that, so you place your stop below the inefficiency. What could you be aiming for? You're aiming for that inefficiency. So as you can see, that was a 12-hour trade. So that is how you backtest. That is how you see price reacted to a certain level, and then you want to know why it reacted to that level. And if you see the reason why it reacted to that level, then now you go into the 1 minute chart. You should have already marked based on a higher time frame that level. Going to the 1 minute chart or less, or maybe a 5 or a 3 minute chart or a 2 minute chart, it all depends. So mark that, go into the 1 minute chart, see if you could have seen any entries within that. At times it might not give you the entry, but there are other entry methods that maybe you learn later on. But if you see something like this, a market structure shift, and then trading inside the fair value gap, that becomes one of the ways for you to enter into a trade, and then you anticipate for a run higher. So that is basically it. You could always backtest maybe on such a time, maybe from 11 to whatever time you want, but always make sure that you will always capitalize on this first before you move on to such times. So I guess that one was quite something that you've learned today, because backtesting is not always using a bar chart replay tool. You can always backtest using such methods, because price will always react the same on those levels. And also maybe let's go to a 15-minute chart. I'd like to add something. So we have something like a premium to discount. So you don't need an indicator to tell you this is a premium, this is a discount. So you can always take your fib. You see this swing low and this swing high. Anchor it from the low or from the high, whichever you would like that to be. Anchor it to that. And as you can see, well, price was above here, it came all the way down to a discount. So this is a 50% of this range, from this swing low to this swing high. So you have this as the discount and the upper half as the premium. So as you can see, price came into a discount, not deep discount, and then reversed. That was the first trade. So we had this inefficiency, which was below the midpoint. So you ask, which inefficiency do I use? So you could always measure your dealing range using your fib or just any other thing, provided you have it to mark you the midpoint of the range. So as you can see, price went down into that range to a discount, and then reversed into a premium. and then came all the way down to a deep discount using this price range also. So we had this inefficiency right there. So it came, traded inside the inefficiency, and then reversed. So the other way that you could have framed maybe this entry from down here, from up here to down here, you could have maybe taken, let me show you, take this fib, anchor it to that high, this high, and then anchor it to this low. So we're in between this dealing range from this high to this low. So as you can see, price went into a premium inside a fair value gap that is in a premium. So you could be framing some shorts from there. So that's always also a way to backtest. You put that into mind. You're in a premium. If you're in a premium, you're supposed to go short. If you're in a discount, you're supposed to go long, based on maybe the kill zone. As you can see here, we have, this is the London close. So this was a very good trade. It was right before the London close. So that was it. And then into lunch. So we had always lunch should, price always consolidates or runs on liquidity. So we had that run on liquidity to the upside, trading inside the fair value gap, and then retracing lower. So if you wanted to mark how far it could go, so you take your fib from this low to this high, mark that, see how far it would run into so maybe you can say that right there. So as you can see, it came to a discount, as you can see. So we had a run lower into a run down into a discount. So what do you have in as a discount array? So we have this inefficiency, and we also have, let me delete this. We have that inefficiency, and also we have this inefficiency. So it could trade into this, move back into this, and then trade down, taking out these relative equal lows, and eventually maybe taking out these lows as well. So that's it. I guess you've learned something today. So you don't need a market replay tool. If you backtest enough, you'll be seeing these things happen, and you won't be surprised as to why they happen. So backtest, show up every day, read the tape, see price action live like this, not using a bar chart replay tool. See price live like this, and then you'll always see signatures that price has left behind for you to use, and that is always price tipping its hand to you, telling you that it's going to do a certain thing. So if you don't see that thing, which quotes on quotes smart money uses for them to cannibalize on dumb money, so that should be it. And until I talk to you next time, be safe.